It's not just China. The US economy is also going through a crisis. Yesterday, there was a meltdown in Wall Street. Almost $1 trillion were wiped out. Imagine that. $1 trillion in value gone in one day. It was the worst trading day for Wall Street in a month. We'll get to the reasons in a bit, but first the numbers. The S&P 500 index dropped 1.7%. Nasdaq plunged 2.3% and Dow Jones 1.7%. This drop was led by the tech companies. Let's look at the big ones. Elon Musk's Tesla plunged almost 6.7%. Nvidia dropped 3.6%. And AI company Palantir lost 6.5%. These numbers give you the full picture. As business journalists love to say, it was a bloodbath. The question is, what triggered it? Three things. Number one, the uncertainty around interest rates. America's central bank has cut interest rates twice this year, once in September and again in October. The markets were expecting another cut in December. Last month, the odds of a cut were 96%. Now it's down to 52%. Why? Thanks to the US government shutdown. No official data has been published in more than 40 days. No inflation data, no jobs data, no trade data. So the US Central Bank or the Federal Reserve is basically flying behind. Hence the confusion over a rate cut. Reason number two is the tech bubble. AI companies have led recent market rallies. They announce global investment deals. They invest billions of dollars. They pump up their stock and the index. But recently, experts have started asking a fundamental question. Will these investments pay off? A recent study found that 95% of all AI investments are not making money. Simply put, it could be a bubble. And this has led to a fall in investor interest. Same with companies like Tesla. For years, it was the pioneer in electric cars. Tesla had the first mover advantage. But now, most legacy car makers produce EVs. So suddenly, Tesla is not unique anymore. Next is reason number three, the Trump chaos. First the tariffs, then the fight with the central bank, then the shutdown, and now tensions in the Caribbean. Donald Trump is taking America on a crisis roller coaster. And this is bad news for the markets. Investors like stability and consistency in policy. But Trump likes the opposite. He thrives by creating confusion. The question is, what is next for the US economy? Well, first we need to see the data. How many jobs were created in October? How many were lost? What was the inflation rate? Only then can investors make an informed choice. Officials say the data will be published as soon as possible. So that's the first piece of the puzzle. The second piece is trade. Trump promised 90 trade deals in 90 days, and that was way back in April. In reality, he struck less than a dozen deals. So the pressure is mounting on the White House. The tariffs are slowly eating into household expenditure, that too with Christmas around the corner. So Trump is turning to Latin America. He's set to sign trade deals with 4 countries, Argentina, Guatemala, El Salvador, and Ecuador. As part of these deals, tariffs on food items will be cut. We are talking about things like coffee and banana. Tariffs will be cut. Same with Brazil. Trump picked a fight with Brazil earlier this year, but recently he's toned it down. He praised Brazilian President Lula in his United Nations speech. He also promised an expedited deal for Brazil, and looks like it is on track. US and Brazilian officials met this week. They're hoping to seal a deal, a trade deal, by the end of this month. So clearly, Trump is backtracking. The predictions of April are coming true. Yes, countries scampered to sign deals with Trump, but the tariffs also drove up inflation. Let's see how Trump navigates this quagmire.
Want the facts?
The latest developments?
News that gets straight to the point.
Well, we've got all 3 just for you. This is Firstpost Live, a brand new show, your window into what really matters.
Don't miss it.